Hi, folks. Are you like most people when you're purchasing almost any type of insurance, whether it be auto, home, health, travel, life? It doesn't really matter these days. You know you need it, but you can't, but you get overwhelmed whenever it comes to all the choices and the details. So you just go with your gut feeling and leave it at that. Well, you're not alone on this. Most people do at one time or another, even us professionals, because very few people are experts at every type of insurance. That's why we're doing this webinar tonight. And to give you the best tips that we have when it comes to these different types of insurances, we're going to discuss mainly auto, home, renters, travel, and life insurance in this workshop, which is going to be about a pretty big sandwich to eat in a 60-minute period of time. At some point, we're going to probably cover some health insurance as well on a later webinar, but it just didn't seem like, I just didn't think we could get it all in tonight. So, but I think we're going to have a lot to talk about as it is, even just with those insurances included in this. So obviously we won't be able to take a super deep dive into each, but we're going to go deep enough to at least get you up to speed and to hopefully bring enough value and bring enough things for you to consider that hopefully will leave you a little better informed than you were before it. So, sorry, jumping around here. So before we jump in now, I want to thank everyone for attending this webinar, and I commend you for being the type of person that strives to better educate yourself on important topics like these. And I must say that it has been a ton of fun doing them every month, these webinars, and we look forward to providing you with many more in the future. I'm your host, Brian Dougherty of PLC Financial Solutions, located in Fort Washington, PA, here with my wonderful, beautiful co-host and partner in business and life, Rachel Dougherty. Say hi, Rachel.
Hello.
Yep, she'll be handling the chat and the Q&A boxes tonight and answering any and all and assisting all of us to resolve any of our technical issues that might occur. So if you're having any problems either seeing or hearing us, just let her know via the chat box and she'll do all she can to help. Plus, we have some very special co-hosts on with us tonight. First is Lionel Yates, co-founder of CY Financial Solutions, located in Valley Forge, PA. He's been an insurance broker for over 24 years and worked for some of the biggest commercial insurance brokerages before he went into business for himself. He specialized in commercial transportation insurance, as well as residential property and casualty and auto insurance. So thanks for joining us tonight in our webinar, Lionel.
Appreciate you, Rachel and Brian, for bringing us into your home and having trust in us to share with your audience. We look forward to it.
Well, I have to say, you know, since you and I linked up, I guess close to a month ago, I just did a simple, and this says volumes for Lionel's website and his Google positioning there, but I did a Google search and came across you. And when I called you that day, it just seemed like instant synergy. And when you agreed to do this, you and Linda, I was elated and couldn't wait to do it. We'll also talk a little bit about how things have progressed with us over this last month as well on the insurance end of the front. But also, our other special co-host is the other co-founder of CY Financial Solutions, Linda Conyers, who is not only Lionel's partner in life and business. She has vast life experience in management and insurance, having worked at the City of Philadelphia PHDC section, housing and real estate, property management, has over 20 years experience handling customer insurance needs. So thank you to Linda for being our co-host tonight.
My pleasure, my pleasure. Hello again, Rachel and Brian, and I'm excited. I can't wait to see what we can do here to help everyone who's participating. So welcome, everyone. Thank you.
I couldn't agree more. After getting to know you guys, and we did a dry run with this the other day, it's exciting just to to really know, to have the knowledge and background that you guys do on the insurances that you specialize in. And I do. I think there's going to be a lot to be learned tonight. I learned a lot in the last month just knowing you guys. So it's great. So now, before we jump in, let me take care of some quick housekeeping. Like I mentioned before, if you move your cursor around, folks, on the screen just a little bit, you'll see two boxes at the bottom. One says chat. You can put any comments that you have in there. And the second says Q&A. You can put any questions that you have in that box. Which leads me to my second point, though, for housekeeping tonight. We have a good bit of material to cover and only 1 hour to do so. So we're not going to entertain any questions or comments until the end. But when we do, we're going to take care of everyone that we can possibly do that. And if we don't get to them all, we'll email you the answers that we have for you. So, and finally, this webinar is being recorded and it'll be both posted on our website, plcfs.com. That's Paul, Larry, Charlie.
Your link.
Yep. Our URL. It's plcfs.com under the past events tab, and it'll be emailed to everybody who's attending it as well. So if you missed any part of it, don't worry about that because it'll be plenty of time and opportunity for you to watch it again at your own convenience. So that all being said, let's jump in here. All right, hold on a second. There you go. So it's never fun to think about the things in life that can go wrong, from unexpected turns to job loss to changes in travel plans and even sudden death, unfortunately. But having a plan in place to ensure that you and your loved ones are covered in the event that something unexpected does happen is a great way to settle some of the unnecessary anxieties that can be attributed to those things that can come along and you may be unprepared for. One of the best ways to prepare is to insure yourself. Whether you choose life, car, health, home, travel, or all of the above, you can rest assured that you'll be prepared for both planned and unplanned times. Of course, choosing the right insurance policy to fit your lifestyle and needs is easier said than done, considering all the choices available today. But during this event, we'll take a closer look at some of the common insurance options to help you make more informed decisions when it comes to finding the right policies for yourself. So let's jump in. So we're going to start out talking about car insurance. So buying a car is a huge financial responsibility, as everybody knows. It goes beyond the cost of the vehicle to include car maintenance, gas, and the biggest one, car insurance. And of course, car insurance, it's required by most states. It's an additional monthly or annual charge that, depending on what type of coverage that you choose, helps to protect you as a driver in the event of an unexpected accident or unforeseen incident that causes damage to your vehicle or you physically. It also protects you in the event that a passenger in your vehicle or a driver of another vehicle is insured who may incur injury as a result of an incident in which you're legally liable or at fault for having caused. So while car insurance is a must, reviewing policy options can be quite confusing. Let's take a look at some of them, some of the options that you have. Before I do, though, I just, Lionel, what's your thoughts, just shooting from the hip, when it comes to auto insurance and some of the things that people should think about initially before they even purchase a policy?
The great foundation about insurance itself, it's another brick in the foundation of your financial independence, your financial plan. It works right along with an individual organization like Brian's and Rachel's that helps you to get where you're going to go if you're here or if you're not here. That's the power of insurance. Right. It reinforces everything that you're looking to accomplish in those situations. So the main thing you want to look at in retrospect to any circumstance of insurance is your profile. A lot of people don't understand, but your credit is a major factor in your insurance in every aspect, between your auto insurance, your homeowners, your health insurance.
Mhm.
Also, these are
Well,
all valid parts of the evaluation for your profile. Obviously, the secondary part of it would be your habits. Everybody's going to have different types of driving habits and situations per different person, different familial statuses that are incorporated that they don't tell you about. Like maybe your kids just turned 13. A lot of people don't know this, but your insurance company starts to evaluate your children at those ages, even if they don't have a license.
wow.
So these are all valid conversations in regards to your insurance. Our organization is based on the foundation of communication. We have these conversations well out before your insurance is due. Just not going to call you and say, hey, time to pay your insurance again. No, we go back, we go over your profile again, and we will ask you, has anything changed? Have your children aged another year? Did you have any children? Did you buy another house? Did you get another car? All these different things come into play in retrospect to your car insurance. And you want to have a great communication with your insurance broker. The good thing about our company, we're an insurance brokerage, so we work for the customer. We don't work for the insurance company.
Right.
Mhm.
Yeah, that's a big one. I have to tell you, we were talking about that at our very first conversation. You remember that? I'm a major proponent of dealing with uh, insurance brokers, independent brokers, over a captured insurance agency of any sort, where they only sell one company's, like State Farm or Allstate or whatever it is, just because rates usually change every year, every other year, and then you're stuck, right? And not just to mention that, but just some of the things like you talked about just there. I mean, as far as like if someone has a teenager or just in fact, you're saying that my son's 12. Now I'm thinking about it.
Yeah, you
Right?
have to.
Right? So
Mhm.
little tidbits like that just really make a difference. So yeah, wealth of knowledge there. Definitely, every time I asked you a question, I get a little tidbit. It's always fun for me on that. That's great. So let's get a little bit to the basics here though. Okay.
Mhm.
So, there's a several different options when it comes to car insurance as far as the makeup of a policy. And we just want to kind of like inform people about what they are. They may have seen them
Yeah.
before.
Mhm.
And, when you get your declaration page and you don't know what the heck, it's all about, and you just kind of take it, oh, that looks good. And you put it in the file or the drawer or whatever. But the basic options that I just wanted to kind of bring up to people was one, your bodily injury liability, which
Mhm.
is, coverage for injuries to others that you are legally liable to pay.
Yeah.
Injury costs will be paid, by your insurer based on the policy limits that you choose.
Mhm.
That's one. Property damage liability. That's usually part of an auto policy, right, as well.
Mhm.
That covers damage to the property of others that you're legally liable to pay. These damages can be covered, also be covered by your insurer based on the policy limits that you choose. A lot goes back to those policy limits, which I'm sure you're familiar with. Here's a big one, obviously, comprehensive coverage. These are terms people hear, but I just want to kind of put a definition to them, let people kind of understand what it is they actually mean. So comprehensive coverage is coverage for damage caused by theft, fire, could be hail, hitting a deer, which I've done before, by the way, or any other unforeseen occurrence. your policy will be paid for by the cost where you have to pay for the repair for your car, or it'll pay for the cash value of it should it be determined to be a total loss. That's the part that pays for that. Less, of course, like whatever deductible you have. And then there's collision as well. And after I go through these, you can tell us if you think there's anything else that people might want to throw on this list. But with the collision, that's going to cover for damage caused, by any, like it says, collision. Your policy will pay for the cost to repair. The cash value of the vehicle should be determined again by the loss. And also, again, subtracting the deductible out of it. And then there's another one, your medical payments. And that's, for minor injuries to passengers while they're in your vehicle. Coverage amounts, again, are typically, now, from what I saw from my research, they typically cover between, say, $500 and $10,000. So, many car dealers, when you're buying or leasing a car, are going to require a lot of these things. Give us your feedback on, is there anything beyond this that you think people should think about, or are there?
Yes, there is. Yes, there is. It's funny you should ask me. You did a great job covering all the different aspects of insurance, except for the Philadelphia clause.
Oh, the Philadelphia clause.
Oh, yes.
I'm in Philadelphia too. So
you're in Philadelphia. A lot of our viewers right now that are listening, they endeavor into Philadelphia to either work or maybe go to have dinner or whatever the case is. But a couple of years back, they changed the regulation in regards to the interaction with the Philadelphia Police Department.
Okay.
And if you're within an accident, and as long as there's nobody who is hurt substantially or anybody who passed away in an accident, the police officers will not come out to the scene of the accident.
Oh, that's right. I remember you saying that, and I had no idea that. I mean, let us know in the chat, folks, if any of you guys knew that was the fact in Philadelphia. I certainly didn't. How long has that been going on for now?
I would say about what, three or 4 years?
Yeah, safely, because initially we have family members. Most of our family are living in Philadelphia, and that's when we discovered this slight little inconsistency. I still think that they should be present, regardless of whether there's major injury or not. But however, started with when our family members would call us. A lot of them we actually don't have them as our clients, but still we are very resourceful, and we still encourage that they do call, or even if the police didn't come, we ask them to even just go to the police station to file a report right away. Because even when some of the individuals, they weren't sure what to do when they waited an hour or even 2 hours, it was sad, and it was very telling. So, and even though they don't really tell us, they don't advertise it, so just know that we just had a number of calls over the last couple of years where that has happened.
I have to tell you,
here's a major tip. Not to cut you off, Brian, but
no, please.
This is very important. When they anchor this accident that you're in with this other person that nobody came out to take a report on, the insurance company automatically pushes it to an at-fault accident.
Really?
Yes, unless you send in proof that you were not at fault.
And how do you do that?
Well, the main thing I would advise under any uncertain circumstances, when there is an accident and you are leaving the scene of the incident itself, is you're exchanging information, which is number one, but validate the person's information at the scene. Because what happens then, that's where your uninsured or underinsured motorist coverage kicks in. If the person's not insured, then your policy can have the coverage in it that can cover the damage to your vehicle to fix the damage.
Wow.
And a lot of people are rolling around here with insurance documents that are either false or they're good, but they didn't pay their policy there, so their policy can be canceled. You don't have an officer, remember, you don't have an officer on site to confirm that. You're just looking at a piece of paper, really.
Wow. That's a good one. And I have to tell you, I years ago I was in one accident where someone, believe it or not, we were at a red light and threw the car in reverse and smashed into me.
Wow.
And I actually, if it wasn't for the police coming to that scene, I imagine I would have gotten blamed for that. So
Exactly. So they try to
somebody.
They'll try to calm the situation. The counter person will calm the situation, change information, and then leave the scene. And nobody knows to go file the report.
Right.
So the report doesn't go on file, so they automatically mark it as an at-fault accident. Or, which could happen in this case, the other person can go to the police station and say you did it. And you never know until a claim came in.
Yeah, no, it makes 100% sense. Absolutely. That's a great tidbit. So let's talk a little too about some of the other coverages that are possible that I'm sure you'll be able to elaborate a little on this, but one being uninsured and underinsured motorists. That's coverage to protect you in the event that an incident with a driver at fault who does not have liability coverage or enough coverage. And I imagine that's certainly something to think about. Towing, coverage for a tow if there's a mechanical breakdown, or a car rental, coverage to provide you a rental vehicle. Some people may think that just automatically comes, but these things could really come back to bite you in the you know what if you don't give them some consideration. What are your thoughts on those things? Are those things that you usually bring up to your customers and that you recommend, or at least bring some light on?
Each option itself is within a direct circumstance of the person's profile based on their driving habits and based on the conditions that you're in. So each one is advisable. And like I said, we constantly have discussions with our customers on a regular basis based on our concerns of what happens. Just like I said, on any changes or anything that you would need any of those additional coverages. And that's the important part, what you're saying here, Brian, because you never would know when something changes. Maybe your kid's driving back and forth to college. We just had a daughter move down to North Carolina. So that's 500 and some miles away. She was living a mile away from us prior to this. So if something happened, either me or her mom could go get her or whatever the case. She's over 500 miles away. So if something happens now, it's a different situation. So you have to change the dynamics of it. You add the towing on there, like you said, car rental, because she'll be inconvenienced and out of a vehicle if those coverages aren't there. And she needs those resources because she doesn't have us around anymore.
Right. Yeah, no, and everything, I guess it's all situational, right? I mean,
yeah.
And you have to find that out from each customer. Here's some other things too. Let's talk a little bit about the potential penalties if you don't have insurance and that type of thing. So one, I mean, you can have your license suspended. Okay. Yes. I've been in that situation for a whole year when I was in my 20s. What a nightmare that was. Two, even just from a traffic ticket or something on that, if you have traffic tickets and they're not paid, you get in that situation, you could end up getting your car booted or something along those lines. And, one of these I was a little surprised what too, you can even have your registration to your car suspended, right? Yes. Not just your driver's license. And that's a big difference, right?
Yes, it is.
Yeah, so you wouldn't even be then allowed to have your car on the road. So,
yeah, they'll red tag your registration. Yeah, they will do it.
Wow, I didn't know they would do that, but absolutely, this just drives it home. Car insurance of all of them because it's mandatory. One of the few that's mandatory, right? So, folks, there's just some things about car insurance, great tidbits. I hope I learned a few things, so I hope you guys did too. Let's jump into the next one. talk about homeowners insurance. So this is another thing, obviously, that Linda and Lionel know a lot about, experience a lot. We're going to talk a little bit about our own situation regarding that. So, because I learned really something good this time, but for homeowners, a plan to purchase a home, then if you are a homeowner planning to purchase a home, you probably already know that most mortgage lenders require homeowner insurance to ensure that your personal property is covered, right? So, and you're compensated. So also to ensure that you're compensated if anything happens with your personal property. And that's a big thing we talked about, this week in particular. So, creating, that policy, and they're not all created equal from what I understand now, right? It's certainly pretty important. And some of the things you want to think about too, when it comes to them, is like, what's your deductible going to be, right? Whether you've chosen the coverage for cash value or replacement of the value of your home. That's a big one, right? We talked about, and I think it's more valid today than ever. And definitely want to read the fine print on those on your policies. But let's just jump into that for a second. We first talked, and I was, we were talking. I just happened to have my policy renewing this month, and one of the things that you had said that really kind of sparked me to think was, what's the replacement coverage on your home? Because today, with the cost of materials, could end up far exceeding what your policy covers it for, when maybe 2 years ago it would have been fine.
That's exactly right.
And so I don't think, until we've run into this situation, and what's wood going for these days? I mean, it's like, I think I'm hearing 3-4 times what it normally goes. So that got my, little light bulb went off. And long story short, I end up changing my policy over to a policy with Lionel and Linda. And I have to tell you, I called my broker and explained the situation. And let me tell you, it really pays to be talking with someone who learns about each of the carriers, because my broker told me that for the value of my home, it had to be like valued at $750,000 or above for any insurance company to value it above what they had it valued at. And I thought I was sunk at that point. And then we talked, and here there is a carrier out there, and goes up to $5 million. So you can really sleep well when it comes to,
adjustments.
Yeah. I mean, my home value's probably on a replacement, I don't know, 350,000, maybe something like that, maybe 4, whatever. But it was only at 490 on the replacement in that. So, man, I know there's a good chance. At 5 million, I could sleep well now, knowing that there's no way that thing's going up that high. They're not going to, I don't think America will be around anymore if a home that goes from 350 up to 5 million, a policy can't cover that. So,
hey, don't be surprised. New York exists. Remember that.
That's true.
It happened there.
So let's do the same thing we did with the homeowners. Let's just jump into a few of the different details that have to do with the policies that really people really should know about, that are usually, well, and I'm going to say lightly, usually included in, but they're definitely things that you need to consider. First of all, structural coverage, which is coverage determined by the type of home that you own. For example, a home policy might include other structures other than the property, such as a detached garage or shed, whereas coverage for a condo would most likely cover interior structure, like lighting fixtures and a wallboard. Then there's liability protection. This is the type of coverage that protects you to extend your policy limits, to the extent of your policy limits. in the event that any accidental injury or property damage inflicted on another person caused by you or a family member is covered. And then there's living expenses on the event of the damage caused by a fire or storm or any other insured disaster. This type of coverage will cover the expenses of living away from home, including hotel bills, meals, other living expenses accrued while your home is being repaired. Then personal belonging coverage. We talked about that with ours, with Rachel's engagement ring, so that there are two different options when it comes to that, to protecting your personal property. There's this was a good one. Actual cash value, right? This option covers your personal property for the cost of the insured items based on their fair market value or at a depreciated rate. For instance, if you were to have a garage sale, you would sell your items for an amount less than the purchase price, right, that you paid for it. Or you have replacement cost coverage, which would basically give you what you would pay, what you paid for. So I think that's a pretty big difference, right? I mean,
Yes,
having
indeed.
coverage for one or the other.
Yes, indeed.
What are your thoughts on that? And what do you usually do with people when it comes to that?
Sorry. What we discovered with people recently was we asked them to go straight to their exclusions. And that's when they realized that they were not either fully covered or all of it covered or partially, and they were horrified. So that was something that I started to do with a lot of the clients or the people who are prospective clients that call in, go to your exclusions page and see what actually do you have, because 11 out of 10, they're really not properly covered, all the way covered. You'd be surprised. So go straight to the exclusion pages.
Yeah, let's talk about that for a second, because another major enlightenment that I had was to talk when Lionel informed me of the difference between an HO3 and an HO5 type of policy. And when I called my broker and I didn't give it away. I said, look, I was doing a little research, because I knew my policy was coming up. And, here it turns out there's actually different types of policies that are out there. I've read about this one called a HO3 and one's called an HO5. I'm wondering which kind I have. And they told me an HO3, just like you told me they probably would, right? And can you just explain the difference between the two and how big a deal that is?
Well, an HO3 policy is basically designed to have everything excluded unless you endorse the policy.
Right.
If you endorse the policy with that item that's on it, then it's covered. An HO5 policy is an all risk policy, which is inclusive of everything unless it's excluded.
So the kind of inverse of each other, right?
It's the inverse of that policy. So when a claim actually goes in, and here's the important part, it's okay to pay a cheaper price for it, but sometimes you pay a cheaper price for a reason.
Yeah, well, let me tell you this, moving over to the HO5 and having that additional dwelling coverage cost us $18 a month more, right? I mean, to go from everything being included, unless it's excluded, like Linda's talking about, right? Or, having it all included, you know what I mean?
Exactly.
It's just a major, major difference. And talk about already sleeping better. I can't even say that in of itself, folks, that in of itself was worth its weight in gold for you guys getting on here tonight, just to learn that. And here's a good question. Put it in the chat box if anybody knew the difference between an HO3 and an HO5 policy. Or
if you know which one you have.
Or if you know which one you have, exactly. So absolutely love to know that. So that'd be good. So now let's talk about some of the studies that have shown that the majority of homeowners cannot answer even a simple question about their insurance policy. And that is a scary fact when considering the risk of loss in the event of an unexpected turn of events. So it's just as important to know what your insurance covers, right? Right. And then to know what it doesn't cover. So I think we really kind of, hit on that. So common coverage excludes things like natural disasters, such as earthquakes, sinkholes, flooding, and mudslides, which I know we don't have a lot of around here, but it would be at least nice to know if you were or you're not. So I think you should look into that. Here's a big one, though. Mold is another common exclusion. And that could be something that we could deal with. So require, and that requires what? An additional purchase, right?
Yes, it does.
To have mold covered. So higher priced items such as jewelry and original artwork may also require purchase of additional coverage. Now, you did ask me that, and we did raise it a little bit for based on, Rachel's engagement ring. And so, I mean, in and of itself, I don't recall being asked that before. And I think if you weren't, folks, you definitely should start thinking about it. May go back to that policy and check what the limits are and see, if it covers the value of some of the things you have, especially something like jewelry, because there's usually an engagement ring in a lot of houses, right?
Not only that, Brian, does it cover it if she's in the house or out of the house?
Absolutely. So that's huge. But nonetheless, if you don't have enough coverage, then it wouldn't even matter, anyway, right? So you want to make sure, like we didn't, so you want to make sure that you do, because the last thing you want to do is, God forbid, have something like that get lost or stolen, and then you can't replace it for what it costs. You have to come out of your pocket to do it, right? Which, and some people may not even be able to do that. So certainly think that that's important. So, let's talk a little about insurance premiums. So they vary by location, right? On average, you can expect to pay somewhere around between $500 and $2,000 annually, which may seem like a lot, but really when you consider what it's covering, it's really not much, right?
Exactly.
Absolutely. You think about even like, again, an engagement ring that's worth, $8,000, $9,000, $10,000, something like that. And you're paying a couple $1,000s a year. Or if you get into a situation, you have a fire and just let's say all your clothes burns up.
Yeah.
What's you and your family's clothes worth to replace?
And that's another good point you're making, Brian, because you got to look at homeowners insurance as an ever moving terrain. It never stands still, and we never really truly take assessment of the things we accumulate inside of our homes. If you don't go back and assess that on a year-to-year basis in your mind, along with your insurance agent, maybe you're not covering everything. Maybe you got engaged last year and your fiance or your wife moved in with you. You didn't cover the ring. You didn't mention that you covered the ring.
Yeah, talk to the fact too. A lot of people you think might be afraid to do that because our insurance rates are going to go through the roof if we do that. It didn't seem to me like they moved all that much, covering the ring, for example, for another, another what, $3,000 or because it was originally at a $5,000 limit. Like I hardly could see the difference in what the original quote was. Is that what you find with a lot of things?
Yeah, the difference is very minuscule. And once again, we don't sell by circumstance of price. We sell by circumstance of value. And we also shop in that particular way because like I said, I want the conversations to be good because it's enough stress already to, we're looking at this house here, the roof is down and, you don't expect stuff like this. So when something occurs like this, you don't want to have a conversation with the insurance company and somebody tells you you're not covered.
Oh,
you don't want to have that conversation.
At that particular time when things are stressed enough as it is, I think that would be a nightmare for people.
So that's why we project our conversations with our customers with their auto policies 3 months out before they renew, their homeowners policy in the same way. You have to do it in a sensible way to have these conversations. it makes things transitionally go over a lot smoother as your life changes. I mean, we don't think about things changing. I mean, I'm just saying that as a whole, as in, is just being running our regular lives. Our son is just going to college, so he's not here anymore. So that's something different for us. And we're thinking about getting him a car down in North Carolina, and all that stuff. So you have to look at all these moving parts.
I would add though too, and I hate to bring up such a bad thing that happened to all of us last year. I don't even bring any bring up the name of the pandemic. However, we had a lot of phone calls for people that are actually transitioning where they're going to be in their homes more so than be outside of the homes now. So now they have to really take a good look at their policies to make sure that whatever business they're going to do, as little known to one person, she didn't realize that daycares were excluded unless you go through inspections or getting things done to her home to have it even covered. So that is important. That was the most important thing that we were faced with over the last 6 months. Like, hey, my job's saying I got to be at home now. I have to make the space. What do I do? So keep that in thought, not just for yourselves or your viewers.
You got a computer home, you got a cell phone. That's $3,000-$4,000 worth of
bring that policy out and go over that to make sure that stuff is covered. So important.
Yeah, I mean, residents, what really I think people could take away from this, especially, with all of them really, but especially the home policy situation, is that circumstantial changes could change what's covered. And it makes no sense not to call and inquire and to find out if you're going to be covered for it. And don't be afraid that your policy is going to go through the roof. I mean, literally, these things sometimes are, like you said, minuscule to make these changes. And it's more important to be safe rather than sorry, right?
Yes, indeed.
So let's talk to it. Now you mentioned it, and here's just another one I'm going to just quickly throw in: renter's insurance.
Yes, indeed.
Right? So renter's insurance. So, I mean, when you look at it, same exact thing, for what would happen if all your clothes, your personal possessions, but, phone, computer, your furniture, your beds, all this was gone. I mean, you could be looking easy at $10,000, $15,000, $20,000 for that. And average renter policy is like between 150 and 200 a year. Am I right?
Yes, it is.
Mm-hmm.
And what kind of coverage can you get for that?
Well, number one, what sticks to you is you instantaneously get a liability coverage in there for over $100,000 if somebody slips and falls within the space of that unit. So that's double the coverage under the circumstances of neglect, based on if it's the person's fault or if it's management fault. Obviously, that's two levels of different things that person can go after, because just like I know, Brian, there are no limitations on who gets sued when these incidents occur.
Absolutely. So I just wanted to throw that in there because it's just, again, just bringing some consciousness to that for the amount of money that it costs, for what you're being protected for. Absolutely makes sense to do it, right?
If you're living inside of someone else's building that you're renting, they're not going to replace the stuff inside of your unit.
Absolutely not. And I have some units in my house, and same exact issue. And I'm just about to bring them conversations. I don't even know if my tenants have coverage, but I want to make sure that they do, because like you said, certainly want to have that conversation. I know that the house is going to be covered. I know that the apartment's going to be covered. I have that situated, but they could be, up, what's creek without a paddle. And,
right.
And I wouldn't be able to do anything for them. So
Okay.
Absolutely. So here's one, little thought about, but travel insurance, right? So we talked about it. Now, neither one of us really deal in travel insurance, but it certainly, some of the research I did certainly made sense when you're thinking about, like, say, for instance, going overseas or something. What if you were to get sick? What if, somehow you had bodily harm brought upon you? What if, all of your possessions were stolen? What if your luggage got lost on a flight? All these types of things are covered with this. And one of the things I discovered in this was that most of the time, the amounts on, say, your homeowners or whatever types of policies you'd have don't cover enough on these types of things to really cover all the potential losses. And really, do you think it makes sense to at least make a phone call in advance to try to find out that information? What do you usually recommend to people?
Through travel policies, there are what they call triple indemnification clauses, just in case if something happens to someone that they died by accident. So they cover at a higher level than what most regular life insurance policies do when you do incite these policies. Also, based on the cost that they're temporary, number one. So based on the cost that's involved to add to your trip, they're worth their weight in gold in unfortunate circumstances. And especially in the circumstances that everybody, the insecurities of going across borders and everything the way that they are now, you never know.
Absolutely. I mean, one of the things, and just to quickly kind of run through, but I thought was some great stuff just to bring up. And by the way, I purchased this insurance last year for the first time ever, just for our short trip, because the pandemic hit, and I didn't know if we'd get another wave and we were going to get canceled.
That's right.
True.
So, and that was the number one thing they talked about. 5 basic things to think about: cancellations, medical emergencies abroad, lost or delayed bags, delayed and canceled flights.
And also find out about the rules if you are international, if your policy still upholds.
Very true.
Now we have it, and I just wanted to throw this out because I just thought of this actually. And now we have an umbrella policy. Does an umbrella policy get involved with something like this ever?
Umbrella policies only kick in after your policy that you have as a base.
Mm-hmm.
If that policy catches it, then fine. Then if that policy extinguishes itself within the first realm of what it is that you have to disperse, then it goes up to the umbrella policy.
I see. So just wanted to, ask that quick question.
But you always have to have that foundation policy in place before the umbrella policy kicks in.
That's in addition to what you already have.
That absolutely makes sense. So just want to jump in now. I mean, that was some great stuff. Awesome tips. Want to talk a little final insurance. I want to talk about a little bit is life insurance. And I know that you guys really don't deal in life insurance much, right? I mean,
No, we don't.
You're mainly property casualty and transport insurance and auto, right?
Mm-hmm.
Okay. So I do a little bit. And so again, being a financial advisor, mainly you use a life insurance license to sell annuities in situations where people are in extremely conservative situations and they can't really afford to lose money, but they're still trying to get a little more upside potential or an income for life, something along those lines. But I just wanted to point out a few things when it comes to life insurance, and you guys may have some stories to share as well. But before we finish up here, first of all, I just want to go over, there's really 2 main types of insurance, life insurance policies that you want to consider or that are really available to folks. And it's really important to understand the variables that are involved when it comes to life insurance. Obviously, these two basic types, which I'll tell you what they are in a minute. So, one's attractive because it sets a term. It lives up to its name, term life insurance. And usually you're going to find that anywhere between a 5-year policy to a 30-year policy. Typically has a set fixed price for the duration of the policy. And it's usually cheaper than the alternative long-term option, which I'll talk about next. And so the concept's pretty simple, with the coverage. So basically, if something you're covered for a death benefit, a set benefit amount in the beginning, and then if something were to happen to you during that term, your beneficiaries get paid that death benefit. That's it. So the important thing is to understand, and there are situations when life insurance, term insurance versus the alternative, which is a permanent life insurance policy, really comes down to situations. A lot of times it's affordability. It's also has to do with, whether someone's more interested in locking in a rate for the rest of their life or an insurance amount for the rest of their life, or if they're real good savers and they believe that, over a 30-year period, I think I'm going to be okay. So let's just get the most bang for our buck that we can get. One of the things I want to say about it, though, and when I look at it with younger clients, is this: I actually advocate a combination of the two. Okay. And the reason I do that is because when people are younger, they generally need a lot more in coverage. Okay. But that doesn't mean, and I've seen this so many times, that when that policy runs out, time's out, that they're not going to need any coverage.
Yeah.
And so 30 years later, 20 years later, you might find yourself uninsurable. And then maybe you didn't save as much as you thought you were going to. And now you may not even have, and now you don't even have enough for a death benefit. Right? So I usually say, let's put something in place to ensure that happens. Okay, no matter what. And it's a lot cheaper just insuring a death benefit. Okay, even with a much, something that costs, say, 3 times the amount, which is about what it is, right? Then you have the right coverage, because when you pass away, or when you're younger, if you pass away, you have a lot more coverage. Most financial advisors, they'll advocate somewhere between 10 and 12 times someone's income in them younger years, especially if there's a spouse that's staying home with the kids and they're going to need to replace their income. So they're two of the things that I really, a lot of people don't think that they might go together, like peanut butter and jelly sort of sense, but I kind of see them like that. Okay. And even myself personally, that's kind of the approach that I've taken with it as well. So that's really one of the biggest things I wanted to talk about. Another thing is really to just explain a little bit of the difference between the two different types of permanent insurance. So you say permanent insurance. Permanent life insurance is just going to be a policy that lasts for your whole life. And it's going to have some type of a cash savings aspect to it. Okay. But when you get involved in having a cash savings aspect to a permanent life policy, then they start to get, over the years, they have developed several different versions of this to have different types of flexibilities. And this is, I think, important to understand. Just these couple distinctions. One, for a whole life policy, okay, this option holds the premium level at the same level for your whole life, and it also guarantees the cash value for the same level for your whole life, and it also guarantees some type of a rate, conservative rate of return on those savings. It's usually somewhere between 3 and 4%. Most of the time I've seen them, it's 4%, which if you looked at CDs these days or bonds right now, a long-term 30-year bond's getting, if you're lucky, 2%, and a CD, you're lucky if you're getting 1%. I don't think you're going to see 1%, right? Maybe 0.7, 0.8, something along those lines. So something like this for a really conservative person, they might find that attractive. The other type of permanent insurance, and now there's several variations of this that we just don't have time to get into, is called a universal life insurance policy. And a universal life policy is really created to be able to be customized to some degree. So, all right, you want to be able to have a certain amount of premium or a certain amount of death benefit early on in your life. So you can increase that death benefit, okay? And then the premium can adjust to that. But then maybe later on in your life, you're not going to want as much, and you can adjust it to there as well within the policy, okay? And in order to lower that premium. So right within the policy. And probably the most important distinction between the two when it comes to the cash value aspect of it is that they're going to give you options with a universal life policy. You can have it, there are versions of it where you could actually have it in the market, right? In some type of a mutual fund. And you can get market type returns. Of course, if the market falls, those could go into the negative, and people have to know that. And then there are other versions where it's just linked to an index of some sort, and it has an upside potential to do far greater than the 3 or 4% than the other type of, than the whole life policy can do. And it also has an option where you can put it in a guaranteed secure fixed account as well, where you'll get a fixed return. It's usually a little less than the ones that are in whole life policies, though. And that's pretty much all I wanted to do, get out to people to give them an understanding of those, basically the term, the permanent life insurance, and then the two different types of permanent life insurance. And the universal has several varying versions of it that are possible. There's even a universal life policy that strips out all cash. And they basically call it like a term insurance policy on steroids. So it has programmed into it to never have much cash. So it keeps the amount of the cost down. And you're basically just paying for insurance, but you get to have it for the rest of your life instead of for a certain term. Now it costs a little more than term, but it could be a nice compromise if you really don't or can't afford to go with a full out cash value policy that's going to cost a lot more. And you wanted that, but you wanted to have insurance for the rest of your life. So just wanted to get out there. I don't know if you guys have any thoughts or any experiences related to that, any stories that you know of, anything related to that.
Well, life insurance within itself, you just want to take a general focus of the things that this just to generalize. It could be more, but the foundation of it is you want to look at the cost of death, the cost of the income that you're leaving the person behind, along with the mortgages left over on your home and the education for your children. It doesn't, a lot of people, you want to take those things into consideration for how much you want to cover.
Absolutely.
In most cases.
Absolutely.
And a lot of people don't think in terms of, I just need enough to bury me. No, you don't, if you look at your situation.
It's, and that ends up being one of the more analytical aspects of life insurance. And I actually, I have programs that go in my retirement planning software that will actually take in all the financial, all your whole financial scenario into consideration. And it actually gives you a recommended amount of life insurance. And it'll explain every aspect to your personal situation why it feels that amount is justified. So yeah, I mean, it can get, if you're really serious about it, and you really want to make sure you've covered all aspects of your life and have full security with it, doing an analysis like that really makes sense, because you'd be surprised when you talk about even just some of those things that you throw in, and then you can get into estate type of things and all kinds of things related to that, which was a little beyond this,
Yeah. Yeah.
this workshop, but can really, get granular. And so absolutely concur with what you're saying there. And, really think people should give that some serious consideration. All right, well, folks, so we're right at the 8 o'clock hour, and I want to thank everybody for attending today. And we're just kind of right now, we're going to open it up to a few questions and answers for a few minutes, just to make sure that we can cover all, dot all our I's and cross all our T's. So, Rachel, you got anything for us over there?
Yeah, got a few here. So let's see. The first one, are people rated on their car insurance, for their car insurance due to age?
Yes, significantly. And that's another conversation based on your personal circumstance of where you are. Not only are the people rated, but their family members are rated on their age also. And like I was saying before, prior to the time that they get a license. So you have to be careful. And that's why you need to have these conversations.
Absolutely. What else you got for us, Rachel?
Let's see, the next one would be, does a person have to name everything that they want covered on their homeowner's insurance? And if it's not, does it mean that it won't be covered?
Well, in most circumstances, you really want to look at your inventory based on the value that it has to you as an individual, because not only are we talking about money, but you're talking about significant value. I know the value that Brian may have paid for your ring may mean something in some case, but there's some emotional circumstance of value that's involved. And you want to take that into consideration. So, you can make the determination of what is important to you and what you really value instead of what the price is. But you want to constantly keep up based on what you're spending for stuff as you accumulate it in life in your home. You go 2-3 years in your house, you look around and you've amassed $15,000-$20,000 more worth of stuff in your home without even thinking.
Just to add to, we're finding that a lot of people, especially our older clients, they have collections, they have coins, they have artwork, they have things that they want to even leave behind, for example, to their heirs or their children, grandchildren, and somebody may not think that that's important to make sure that it's covered or they should be included, but by all means, you should never doubt it. And if you do doubt it, just talk to your agent, talk to them, make sure. And they're actually streamlining a lot of the policies now. So even when we go in to do them, those questions are line item very nicely where we say, hey, do you have, for example, coin collection? Do you have baseball cards? Do you have a fur coat? Do you have, people are, oh, I do, I have that. And then you just decide,
Basically, it's more what value does it have to you is really what you want to wrap around it,
Mm-hmm. Hopefully that answers the question.
Right.
Mm-hmm.
Okay, so let's see. Next question says, we've had a permanent life insurance policy for over 30 years. But for way more coverage than we think we might need now. Should we lower the face amount in order to make it cheaper?
I think I'll jump in on that one. So you may want to consider that. It may be consideration. I think there are some things that when I sit down with some of my older clients and we're going through their long-term retirement plan, there are some things to consider before opting out of that or lowering. It may make sense, like I talked about before, since some insurance can be pretty expensive, it may make sense to reduce it and just keep it for a death benefit, But in some cases, and this is one in particular that I think should be thought about, especially for a couple, when the first one passes, the second one only keeps the higher of the two Social Security payments. So, say the average, generally a spousal benefit's about $1,000. So average benefit might be $2,000 to the worker. If the worker benefit, if one of them passes, then the one that the surviving spouse keeps a $2,000 benefit, which is the higher of the two, and their income's going to drop by $1,000. Generally, people's expenses only reduce by around 80% when that happens. So you're stuck with 66% of or 2/3 of the income, but your expenses only reduced by 20. So it might be worth at least analyzing to find out if whatever the death benefit you have would fill that gap, or if it's, like you say, way too much, maybe just reduce it enough to where it fills that gap, estimating it out for your life expectancy. But I wouldn't just jump right in and reduce it or sell it. I probably wouldn't even advocate selling it unless there was some type of terminal situation or something along those lines, or a real need financially. But I would look at it for that first before I would do anything to reduce it.
Okay, let's see, we got 3 more here. So the next one is, we're going to Europe this summer. How much travel insurance do you think we would need?
Geez, I think you've dealt with it more than me, Lionel. What are your thoughts?
Well, once again, you want to take into consideration based on what it is that you're leaving behind to take care of. If you and your spouse are going at the same time, you have to consider that. If you're leaving a person at home, are you leaving children at home? Maybe you have a disabled relative that you're taking care of, which was me and my wife's situation at one point in time. It'll all be based on what your profile is, and these are great conversations to have with your insurance broker prior to the time that you take your trip, so you can be prepared.
Yeah, because I imagine that could range from very little to a good bit.
Exactly, based on what your situation is at the time.
Great.
Okay, so next question. If someone hits my car when I'm not in it and I file a claim, will my auto insurance rates go up?
In most circumstances, your insurance should not go up because it's a comprehensive claim. You are not at fault for an accident, so it should not be given consideration for your costs to go up or down. But in some cases, like right now, in insurance, we're in what they refer to as a hard market, meaning that the details of it are harder for you to be placed because they've changed the criteria because of the pandemic a lot. And I don't know what happened this year, but there've been a lot more speeding and accident incidents, even with less people on the road for some strange reason. But I guess that's an anomaly of the pandemic itself that's come across. So the insurance companies are adjusting to that, and they're making it a harder market right now to be evaluated for your insurance. So the best thing to do is try to keep your profile clean. And make sure that you don't have any tickets or anything like that. If anything you can control, control it, and make sure you keep yourself in a good light to maintain your costs.
Couple more I see in actually in the chat.
Yeah. All right, so the next one, if I've never filed a homeowner's claim, but I have something, big that happens that's covered, will my rates go up on my homeowner's insurance?
It depends on who your carrier is and based on what their evaluation process after the claim itself. In most cases, based on the size of the claim itself, they may come back and reassess everything, or based on what the conditions were for the claim itself, they could come back and reassess for the year they're coming after. But during midterm, they normally don't, they don't bother you, based on the year that you're in. But they could come back the year thereafter based on what the claim had involved in it, and reevaluate you and raise your rate.
Even if a person was clean all the way up to that?
Yeah, because like I said, what is the claim? If a tree fell on your house, they may want to come out for an inspection to see, hey, you got too many trees around your house. They may come in and say, hey, you got to cut these trees down. And like my sister, it ended up costing her $4,000 to cut some trees back.
Yeah.
So, it can get hairy based on, like I said, the changes in what happened during the period of time that you own the property.
Right.
And now to add to Brian, if I can, we discovered too with a couple of our carriers that they're going to actually do their own investigation with or without the homeowner knowing. The famous drones now are now going to start being deployed. Little do people know, just so they can see what their risk is based on as far as the area of the homes or what's going on around the homes, terrain of the homes. You'd be very surprised.
So don't be
So,
surprised if you look up and you see drones above houses.
just
Yeah. I told
it
him
has
he's
to
got a
protect
couple
the
here.
risk.
Other here, people asked him too, does the level of education have an effect on the cost of home, of car or home owner's insurance? Did they actually look at that?
Yes, they do. It sounds funny. It reminds me of a commercial. It says they look at your financial status. They look at your education level. The guy says, isn't that illegal? No, it just turns out that it's immoral.
Right.
That's
Yeah.
really all it is.
And what about if someone's retired? Does that change the cost of the homeowners or the car?
That could be taken in consideration. A lot of times, once again, you got to have the right conversation with your broker. Like I said, and I will remind people, I haven't said this, but the conversations I'm talking about, they're free.
Yes.
It doesn't
Feel
cost a
free.
dime. It shouldn't cost you a nickel to talk to your broker, or have a broker that's open enough to share the time with you to go over these things that change in your life, or the questions that you have as you transition in life.
Exactly.
These are all valid questions that your guests are asking here, and everything should be taken in consideration based on that. And if there is a situation where we can find a discount with that, we're going to use it.
Oh, actually, we'll be more than happy to review your information with you if you like. And that's what we do all the time. We have people calling us up out of the blue. Hey, I'm looking for any discounts, anything going on that I could, lower my premium a little bit. We're here. We'll do it.
There's a lady called us. She called us. It was 12:35 a.m.
Yes.
Oh my
and
God.
she had to get her car inspected for the next day, but she didn't have insurance on the car.
Oh my goodness.
So we gave her a policy that night, and then that morning she went and got her car inspected when she purchased a car.
Correction, you gave her a policy. I was.
Now that is customer service, I have to tell you.
She didn't want to take the foot at that time, but
I want to get my beauty sleep. No, just but I had to nudge them like, hey, you want to take that? So yeah, it turned out good.
He had the cell phone on in bed, and I like, well,
It's right on the nightstand.
and it is, and on a serious note, this is, again, if situations do happen, and once again, we don't consider our customers just customers, they're family. If something should happen or anything like that, you or Rachel call us 1-2 o'clock in the morning.
Yes,
Sometimes
indeed.
we're going to answer the phone.
Yes, indeed. Yes.
We're gonna
you're
answer the
people
phone.
after my own heart for sure, because I feel the same way. I constantly text them with my clients on the weekends, all times and hours. And I tell them too, especially if I'm working on stuff for them, because the kids might not get to bed till like 9:30, 10 o'clock, whatever. I'm just starting working, and I might have a question about a plan. Just, how late can I hit you up? You know what I mean? Let me know, because, I think it's important, and vice versa. I tell them, you have a question, hit me up. They know that. So one last question here, and this is, I guess, a good one. What's the purpose of an umbrella policy?
The purpose of an umbrella policy is to pick up the amount of value that may get above the minimums that are on your coverage.
What coverages are umbrella?
An umbrella could cover standard liability in your home, or it could cover a liability that's in your vehicle. So if you don't have enough coverage, let's say you went for, and they won't allow this really, most insurance companies require a higher level of coverage as far as liability concerned before they allow you to purchase an umbrella policy itself. So they're going to probably have you raise the base policies first, then they will incorporate an umbrella policy.
And you're basically saying it's umbrella in both your auto and your home.
No, there are two separate umbrellas.
Oh.
There are two separate umbrellas that covers each and every individual, and based on the circumstance of claim that the person has put in, because what you and I don't know is how much somebody's going to sue you for. And there are limitations on the amount of coverage that you may have on your regular personal policy that may go up to $300,000. But if somebody sues you for $5 million, you know what I mean? And you have assets at your home, and you know what I mean? You never know. That's where the umbrella policy comes in, and you cover that umbrella policy over top of those minimum coverages or standard coverages that you have in your policy to take on that responsibility if the situation becomes that way.
Is it something you usually recommend, or certainly certain situations?
I recommend it for people who are accumulating assets, because you don't want to get to a certain point where you build in your life all these different, and that's why I said you got to go on constant evaluation. You know, as much as we like to think or not think about it, in some cases you got a target on your back in those situations.
Right.
And once again, you tap, you know, somebody on the back of a bumper, you got a lawsuit coming at you for $5 million. And you know what I mean? You've built yourself to a certain status in your community and everything, and they knew it. You know what I mean? They're coming after you. There's no limitation what somebody can sue you for.
Right. No,
So you want to cover everything that if you're garnishing assets and you're growing the circumstantial assets to take care of yourself and your family, definitely consider an umbrella policy, because you don't want to lose that.
Absolutely. Well, that's great. That covers all of our questions. You know, folks, that and also concludes our webinar for today. I can't tell you how much we enjoyed doing this with you guys tonight. And I hope you did find value out of the information as well. And if so, I encourage you to sign up for our next webinar. It's going to be next month on Thursday, July 22nd at 7 p.m. Our topic is going to be introducing investing. And so please keep a lookout for our emails, texts, and social media posts so you can sign up for it. That being said, I'd like to thank our very special co-hosts, Lionel Yates and Linda Conyers of CY Financial Solutions in Valley Forge, PA, for doing this with us tonight. It's been a complete joy having you guys on with us and getting to know you both. It's rare to find professionals that are as knowledgeable, friendly, and down to earth as you guys are. We'll have to definitely do this again sometime. But before we go, I know, and Linda, can you please tell us how folks could get in touch with you if they had some more questions and they wanted to talk to you personally?
Yes. Once again, our website is www.cyfinancialsolutions.com. Also, our phone number is 484-252-8219.
Uh-oh. Something happened. Sorry, guys.
Okay.
Okay, hold on. Don't want to lose that. All right, there we go. So yeah, and I'm glad you mentioned the phone number, because I think it got cut off here. But yeah, one more time with the phone number. I think no, it's here. But it's in small print.
Yeah, the website again, I'll give it to you. It was www.cyfinancialsolutions, all one word, no spaces or underscores. .com.
All right, great. And also too, folks, Rachel and I, our company's called PLC Financial Solutions. Our office number is 215-804-9708. We're located in Fort Washington, PA. We're going to be, this is the fourth one of a series of webinars that we are going to be giving every month, leading up till at least Christmas and then probably well beyond that as well. I want to thank everybody for their time tonight. I hope you enjoyed it and found it valuable, and hopefully we'll see you again next month. Have a great night.
Thank you. Thank you, Brian.
Thank you,
Rachel.
appreciate
Thank
you
you,
guys.
Pamela. Thank you,
Night,
everybody. Stay
guys.
safe. Take care.
You too.
So long.
Bye.